let me kick us over to Rocket Lab. So the thing that I liked most about Rocket Lab, and I started with this, but now that we got a few more people kind of in the screens these days, chiming in a little bit later, the thing that I liked most about this was they gave a lot of color around the actual anomaly that happened at the end of Q3. And so for those of you guys that don't necessarily know what happened, sorry, there's just like a little pop-up on my screen. There we go. Let's fix that. The launch went okay for their 41st small launch. So people that are unfamiliar with the company, they've been launching rockets since late 2017, early 2018. The Electron rocket is small launch, so it doesn't necessarily compete like for SpaceX's Falcon 9 or the Starship Heavy or anything like that, Falcon Heavy. But it does provide space systems as well and what have you. We could go into a lot more color and detail about this, but I'll speak pretty general about a lot of different topics because there was a lot of good coverage in the Q&A section that I think was really important to kind of go over. But just to give people some color around what happened, so they had a second stage failure. So basically, once you get to a certain height, you launch a second stage to be able to shed off some of the dead weight as you kind of propel yourself up to higher in the atmosphere. Second stage kicks off, and then you go into orbit, right? The second stage kind of shorted out like a minute, or not a minute, like a second or two right after ignition. And so therefore, it killed the power for the basically second stage, and it went back to Earth, right? So failed in that respect. So everyone's kind of like, well, that's not good, right? So let's just check and see what happened with that. They released an entire investigation, and they did like literally like a 2 to 3 minute kind of conversation walking through step by step. Is like very transparent about like what exactly happened, how they're mitigating it, like very succinct and scientific. And they've also released some more details and color on this in online as well. So if you go to their X page, they actually released a link to people that are potentially interested. But like they literally were just doing all this analysis about 1.6 seconds of data after the second stage kind of kicked off. So it was really cool. And if you want to see when it happened, just go to the launch that they have on their website, and it's 151 seconds after launch. You can kind of see the failure associated with it. If anybody's really interested, I know I get kind of nerdy about this stuff, but the thing that made me most excited was seeing this. So unfortunately, with what was kind of going on in that after that failure or anomaly at the end of 3Q, it pushed back some of these launches into 2024. So instead of getting 15 launches in 2023 like they wanted, I think they might get 11 or 12. So unfortunately, the launch cadence is going to impact the Q3 and Q4 earnings, which we'll get to in just a second. But the thing that makes me most excited is, and they gave a lot of color on this as well, which I want to talk about, is they have 22 missions booked for 2024. Now, this is their capacity. So they're currently at like 22 missions is where they're at. And they asked, they were like, well, do you feel like you can't take on more clients? And so they're like, we don't ever turn down clients, right? We always make sure that we have space. And a lot of times people might not be ready, right? So this is when you launch a vehicle, they have the launch vehicle ready, but they might not necessarily supply the satellite. They might not necessarily supply the spacecraft that's going into these rockets. So people might kick it down a quarter, or they might kick it 2 quarters. And so they might have a spot opening up. So doesn't mean that they're getting rid of things, but I anticipate they're going to have 20 to 22 launches next year. Some of these are HASTE, so low Earth orbit, or kind of suborbit rockets that they're testing for defense purposes. And a lot of these are confidential sort of clients. So you can see there's like 6 or 7 of these in there. And then the normal black electrons are just normal launches. Then you have the reds scattered throughout the HASTE as well as electron launches. Those are when they're going to try to use reusability, or I don't know if it's them going after reusability after this rocket has been launched, or reusing some of the previous hulls and previous engines that have been recovered, because they are trying to get that in there as well. This is a point where I just want to take a quick pause, because they gave some color. Adam Spice gave some color about what the gross margin would be for these launches. And we've continued to see gross margin grow from the high teens to the low 20s to now high 20s on a non-GAAP basis, to the point where now they're starting to forecast in the low 30s. And you're sitting there saying, like, dude, we're putting rockets into space. Like, low 30s for a gross margin is pretty damn good. So, like, what's going on? And so he gave some color, and I'll talk about Electron right now, but Solero he gave some color to as well. And the thought that he kind of put out there was like, we're going to get close to a 50% gross margin at a 24 mission per annum cadence. So as you approach that 24 missions per annum, or 6 launches per quarter, you're going to get very close to that 50% gross margin, which is going to be huge for the bottom line eventually, right? Because the more and more launches you get to, let's just say they go to 30 launches or 35 launches in 2025 because their capacity increases, that's just going to basically offset a lot of that OPEX that's associated with just running the business, the SG&A piece, right? So just wanted to kind of talk about that, and they kind of gave that color associated with it, because specifically in Q3, which was 2 launches, they were at 27% gap, right? So that's not non-gap, that's gap. So that's pretty good, right? Just with 2 launches, and they're gonna, if they get 6 launches in a quarter, they're probably getting closer to the low 40s on a gap basis. Non-gap, they're aiming for 50% long term. They talked about a bunch of different things. The Neutron rocket for them is their medium-sized launch vehicle. So instead of doing 700 and some kilograms to low Earth orbit, it's going to be something like 15,000. So much more in competition with, say, a Falcon 9-esque sort of rocket. This will be a reusable rocket. And so they're just kind of going through the stages of delivering some of these milestones. So this is talking about how they blew up some of the tanks, which they gave some color to that. It's like not just blowing up the tank, but if you think about it, this is a lot of the material that they're using throughout the rocket. So you're actually getting stress material, information that can be used as well. So that's pretty cool to be able to see. Here's some of the other tanks that they're building, the Archimedes engine kind of model that you have here. And then Launch Complex 3 kind of starting to be built, which is where they're going to be launching the Neutron rocket in Virginia, Wallops, Virginia. So that'd be cool to see. And then here's all the developments that they kind of achieved in Q3 alone, and a few other things that are kind of imminent, kind of coming through that I expect to kind of see going forward. They talked a little bit about HASTE, which is their suborbital sort of launch rocket there, which is going to be huge for defense, and that's going to be really good for increasing cadence throughout. The cool thing is that Rocket Lab is like, it obviously started as a launch company, and now they've transitioned to an end-to-end satellite. So they're actually developing with Varda and a few other companies like these 0G sort of satellites, where they're like being able to 0G environments through some of the basically crafts that they're building, the spacecrafts that they're building, so they can create environments where you can do chip testing, like semiconductor chip testing or pharmaceutical testing or anything like that. Specifically for Varda, this most recent one that they did in Q3 was testing for an HIV drug, to which it was successful. And that's pretty cool, because if you're able to demonstrate that and get that up and running, it could be a whole nother revenue stream for them for the long term, where every single quarter, or however many you need per quarter, you're doing these 0G environment sort of analyses and bringing those back to Earth safely to be able to help develop the future of whether that's semiconductors or whether that's the pharmaceutical industry. So that's kind of cool to be able to see. But they also provide solar panels as well. This is a good opportunity maybe to take a quick stop on the solar panel piece. Let me pull up some notes that I took with respect to this. And so in the Q&A section, they're talking about 30% non-GAAP gross margin for the solar panel piece, which is pretty good. Not efficiency, right? Because we know that these things are very efficient. They're in the 30% efficiency range as well, which is better than most, terrain solar panels that we talk about, which are in the 15 to 20% range. The efficiency of these are like 33%, which is really good. But we're talking about gross margin, which is basically just like the cost to be able to build and what the cost of goods sold basically is when you get these things out the door. So the current backlog is currently at about 30%, and the ones that they're approving now to the backlog, Adam Spice basically said he hasn't really seen any much below 30% for quite some time. And he thinks that as we continue to get more and more contracts, as the backlog kind of runs through, those contracts are going to be running north of 30% gross margin. So that's pretty cool to be able to talk about, knowing that that's a good piece of revenue from the space systems piece, specifically the Psyche mission that just went to an asteroid near Jupiter, that was actually launched by SpaceX, is being powered by Solero solar panels, which is kind of cool, right? You're collaborating with NASA, you're collaborating with SpaceX. It's not just a launch company at this point. It's literally like, what do you need? And Rocket Lab will help get you there. So they talked a little bit about the Global Star production systems, which we'll talk about in just a minute when we get to Q1 revenues. Yeah, this is the Psyche mission I was just talking about with the solar panels. These things are like hair thin, which is pretty cool, because you have to think all the specific weight that you add, is less payload that you can take, or less information you can get from capsules, whether it's gas or rocks or whatever that you're looking for to be able to capture and bring back home. So going into financials, I think everyone knew that these were going to be subdued. 68 million is where they ended up. I think before they had an additional launch expected in Q3 before that anomaly happened. Now they're able to kind of go back, and they have a launch kind of planned for the end of November. So that's going to be kind of cool to see that get kicked back off again. And hopefully they'll have 2 or 3 launches in the fourth quarter, which we'll talk about, kind of a preview look of fourth quarter and the first quarter here in just a second. So this ended up about 9% quarter over quarter. And so this was my kind of concern, scratching my head. I'm like, are we really flattening out this quickly for revenue? And so it's kind of giving me like a little bit of a head scratch going into earnings. And that was my hope, as I would address it. And they did address it very well, which we'll get to in just a second. Because the thing that was kind of concerning me was just like, we started the year in the $50 million revenue mark, and we're only at 68. You're really slowing down comparatively to where we were going from 2021 to 2022 revenue growth. But you can see the gross margin from a non-GAAP perspective is growing to just below 29.5%, and in a GAAP perspective, 22%, which for a launch company is pretty good. And it's only looking like it's going to increase from there as you continue to get more and more cadence going up. Backlog, so it's pretty healthy. They talked about 57% of this 582 being kind of realized in the next 12 months or so. So that kind of gets you around the 250 to 300 million-ish range, if you want to kind of use that as a key to kind of understand where they'll land for revenue for the full year 2024. So they increased that 9% from last quarter. They spent, I would say, a little bit more in terms of operating expenditures and CapEx than I wanted. I was expecting cash to kind of stay at 400 million. And to add some color to this, there's a $100 million debt note that came current as of this quarter, which I think is a July 1st payment or something like that. That's $100 million. They asked specifically about that, and they said that they are in deep conversations with several people about who will refinance that debt. So they're not just going to pay it out of this $374 million in cash. And so that's a good piece to kind of talk about, that they're in good conversations with people that looks like they would refinance it at favorable rates. And then second, they said it would hopefully close by the end of this year. So hopefully by January, February timeframe when we're reporting, again, we'll see some news associated with that. And I'm sure it's big enough where they'd announce it in a separate release as well. But the one thing that they did talk about was, I was kind of surprised at how little OpEx and cash flow deficit they had last quarter in Q2. And they talked a little bit about that. They gave some color around the fact that this is just how some of the payment structures work. They've received a lot of milestone payments for Neutron and several other things that happened in Q2. And then Q3 specifically, they're not getting those milestone payments, and they're looking to kind of be more expensive in Q3 and Q4, and then kind of swing back to getting some more milestone payments for more specifically the Global Star satellite service businesses. in the 1Q time frame. And we'll talk about that more in just a second as well. And if people just listening, they fall asleep because I don't see many comments going on, and I'm just like talking to myself.
No, I don't think. I think people are just really attuned and paying attention.
Yeah, you're being too kind, Chris, as always. But the thing that they also wanted to talk about was the Virgin Orbit conversation as well, which they said that they got around $100 million worth of facilities as well as efficiencies that they're probably going to realize with that for just the price of 16 million. And so that was kind of cool to hear that, you know, you have an opportunity to buy something in their backyard in Long Beach, and that's going to add directly to the bottom line. So very encouraging stuff, right? So like from a revenue perspective, you're like kind of like, you know, but they're still getting there. And then you get to this profitability trends piece. And then we get to, I think, the next slide, and it starts to get kind of exciting again. You're like, okay, they're delivering. They're still in this like chug along. But the whole conversation throughout the entirety of the talk until we got to this point was like, we can see the light at the end of the tunnel to get a launchable Neutron vessel on the pad in 2024, which is always kind of like when you hear that and you're almost 12 months away from the end of 2024, you're like, damn, like, is this really going to happen? And so after this final 2 slides or so, I'll take a pause and hear if anybody wants to talk about any sort of specifics. But this is talking specifically about how they're growing EBITDA, adjusted EBITDA to get closer and closer to cash flow break even. And once you kind of pull this in, it's like you're hitting a lot of dependent factors with Neutron and stuff of the like, which if you think about it, you have a successful small launch vehicle that will launch 22 times, up to 22 times next year, a successful space systems business where the gross margins increasing closer to 30% on specifically solar, but there's other components. I didn't go into too much color about the gross margins associated with that. But that's technically subsidizing an entire development of a new rocket that will be able to, not in 2024, doesn't seem like too much in 2025, but starting in 2026, start to truly add to the bottom line in terms of getting new customers and being able to market for larger opportunities. What those opportunities are, I think, is kind of left to interpretation. But that's when you're starting to truly compete with like the SpaceXs of the world, of like Falcon 9 and stuff of the like. And the thing that's beautiful about that is there's talk of some of the Falcon 9 components, or just the Falcon 9 program as a whole, just being completely dismantled and only focusing on Falcon Heavy and Starship. And so if that's the case, then this will allow them to open up into the medium launch rocket market and only have competition with ULA, which is a collaboration between Boeing and Lockheed Martin. And so that's all speculative at the moment. We can talk about that at a later date as that kind of develops. But the hope is that they're coming into a market that SpaceX is actually technically leaving. So because they're going to be focusing on more like interplanetary and large vehicle launches rather than these small vehicle launches. So this drives me to, what does Q4 look like, right? Because we're getting closer and closer to this cash flow break even. The revenues are increasing for the last 4 quarters. Like what's going on? So look on the very far left. This is Q4 revenue outlook. I was actually surprised that they were forecasting 65 to 69 million in terms of revenue. They are planning on having 2 launches, which is going to generate about $16 or so million. And then they have the space systems revenue kind of coming in at 48 to 53 million. So I was very surprised to see a quarter. I was forecasting they were going to be predicting about 60 million. So the fact that they're starting to get some more and more revenue coming through the door for space systems, then getting 2 launches, is good to see. They continue to increase to these non-GAAP gross margins going into the low 30s, which is something that I want to see. And even on the GAAP gross margin kind of being in the mid 20s is something I like to see. There will still be some pretty big OpEx associated with getting some milestones done. But the EBITDA loss is only going to be 23 to 27 million comparatively to where we were for this quarter. And then 1Q is when things start to get pretty fucking crazy. They're planning on having 4 to 5 launches. So those 4 to 5 launches is going to be $30 to $37 million. So keep in mind, if they get 4 to 5 launches, they only launched 11 in the totality of fiscal year, or will be launching 11 in the totality of fiscal year 23. That they are actually able to meet the 22 launches for 2024, or even if they get 20 launches. Keep in mind, this company since 2017, 2018 timeframe has only launched 41 vehicles. So if they're able to do that, they've literally met or increased the amount of launches that they've had 50% in a single year. So it could be getting to the point where they're getting to a place where profitability is so good, they can start to focus on ramping up and getting to a place where they can get to maybe 30 launches, 40 launches over the next coming years. You can see what that's going to do to launch revenue kind of going forward. You're looking at $150 or so million worth of potential launches next year. As you have 22 launches in total, this is only 4 or 5. You're getting close to $150 million in revenue just from that alone. Space Systems revenue is actually expanding close to 30-40% as well, going to $65 million. So overall, looking at just about $100 million in terms of revenue, which is a pretty expansive increase sequentially. And then year over year is probably going to be close to a 80 to 90% increase, because I think Q1 of 24, if I remember correctly, let me go to the previous slide, was 55 million. So it's going to be like an 80 to 90% year over year increase in terms of revenue. So overall, things are kind of looking up with respect to what's going on at Rocket Lab. So my hope is that this doesn't fall apart, and the 22 launches that are kind of in schedule go forward, because nothing would make it more attractive than starting to see the launch cadence really start to open up to the point where this thing becomes kind of cash flow break even. So you think like that's where it starts to truly be beautiful and sexy, because you have cash flow break even and you're subsidizing a new rocket launch, right? That's not necessarily having to take subsidies from NASA or anything like that. It's a true launch business that is successful. And Chris, after that conversation, I want to kind of turn it back to you, because you talked a little bit about at the beginning of the show how you're kind of like, well, I'm not really too prepared or really liking this company because there's not really many other competitors to compare it to on a public basis. And I guess my question is like, I recognize it's about let me just double check the market cap. It's pretty low right now, but I think it's like $2.5 billion. Let me just double check and then we can get into it. 2.1 billion. So being a $2.1 billion company, having the potential to launch 22 rockets next year and continue to do well, while others in the space, Virgin Orbit being one, Astra still struggling to make their debt payments, but they did get some short-term wiggle room for the next couple weeks associated with that. And then other companies which have yet to launch a vehicle in 2023. Like, what are your thoughts? I mean, is this something where you're like, it might be something getting closer and closer to that? If somebody wants to take a gamble on something like this, it could be an opportunity. I don't want to put words in your mouth, but I'm curious what your thoughts are.
I mean, long term, they seem to be executing in the right direction. You know, long term, if they're able to do everything that they're promising and they have enough of a runway, which clearly I think they do, they could be a contender as a competitor to SpaceX. You know, and last time I think the valuation of SpaceX was about 100 billion. So, you know, it's one of those things that's still left to be seen. I think that SpaceX is still way ahead of these guys.
For sure.
But they're getting there, you know. And so if SpaceX is the number one, then these guys seem like they could be a promising number two, because there's always number ones and number twos and number three winners. Usually the lion's share of profits tend to go with number one, but that doesn't mean number twos and threes don't make money. So yeah, it'll be interesting to see where these guys end up in the future, because it seems like that heavy investment in technology is going to pay off, but it's going to be a while before it happens. It's not something that's going to happen overnight. So I'd be curious to see what kind of results they have next year and how much they can actually meet a lot of their expectations.
Yeah, I'd say the thing doesn't really change. I think this is one of those things where it's like continuing to meet those opportunities to get further catalysts in the future. So like Neutron is still the biggest catalyst that they have, right? Once that's kind of done and dusted, a lot of their operating expenditures magically disappears, because obviously they're not subsidizing all these launch and testing and all that R&D associated with that. The other piece of it, though, is like how many launches and are they going to have to do to get successful with Neutron, right? So the first part is getting it off the pad. You know, if you do that, that's a success, right, on its own. But the fact is they want to have Neutron be reusable, like a Falcon 9 rocket. So how many launches is that going to take? Think about how many times the Falcon 9 had to launch and crash and burn on a pad before it truly was able to be reusable in the long term. So, you know, they did give a little bit of color. So it was like, okay, once we're up and running, like maybe in 2025, we'll start getting some contracts. And that's not off the table, at least what Peter Beck said. He was like, they're going to be more bootstrappy about it. They're going to just try to get to certain milestones, and they're getting closer and closer to those milestones before they're like, okay, we have a tangible vehicle. So the last thing you want to do is be like, get to the middle of 2024 and hit some roadblock, and you're like, it's actually going to be mid 2025. And then you hit another roadblock in early 2025. You're like, it's actually going to be end of year 2025. So they're like kind of being cautious and superstitious, being like, let's just get to these certain milestones first, and then we'll start negotiating some contracts, right? And I think that that's going to be a pretty cool piece of where they actually start to hit some sort of pivot points. And then I think the fact that they're going to start getting to a much larger just overall revenue, you know, increasing close to 100% year over year. I think that that's going to be a point where sometime in 2024, you should expect a place where EBITDA break even kind of occurs. Now, it's hard to kind of say because they don't really give a schedule as to how much OPEX is going to be associated with Neutron throughout the rest of 2024. And that's a big chunk of change. And they didn't really give color on this quarter about how much is kind of remaining. But I know probably a couple quarters ago, maybe a year ago, they said there was about $200 to $250 million remaining in CapEx or operating expenditures associated with it. So, you know, now we're kind of a year down the road from that. Is that still 100 million? Is it 150? You don't really know. But some good things, right? I mean, they talked a little bit about the one thing that was kind of in the back of my mind, which is that $100 million debt payment. And that comes due July 2024. So they talked about that's going to be refinanced. That's kind of a sigh of relief off my back. They are talking about the gross margins increasing. It just seemed very well optimistic. It didn't seem like that they were trying to sell you a bag of used goods, right? Not like a lucid presentation like you guys were talking about on Finance Junkies yesterday. So another stepping stone, but I think it's still a quarter where you're like, okay, wait and see, right? Because you have that anomaly. We know how weather can delay and satellite preparedness can delay launches. So will they actually get 2 launches in the quarter? Will they actually get 22 launches next year? That sort of stuff where you're like, we'll start to see it when we believe it, and actually we'll start to believe it when we actually see it. So to me, it's still another, like, if you're sitting there on the sidelines being like, I don't know, it's like, I don't think that this is going to go belly up today or anything like that. I think they have obviously $300 some million in cash. They have some runway, but there's still some milestones to go, right? And I think that you could wait a quarter or two to see how some of this stuff pans out and get a little bit closer to some of these catalysts and maybe reduce some of that capital exposure risk in the meantime. And it might go up to $5 or $6. You know, in the meantime, the price is sitting here about $450 at the moment, $2.1 billion market cap. It might go up to a $3 billion market cap. Who knows? But I mean, the fact is, if you wait for some of that capital exposure to kind of die down, you're still looking at an opportunity of this being a $20, $30 billion company potentially. I don't think it's going to be $100 billion anytime soon. It's like kind of a different magnitude than a SpaceX at the moment. But, you know, if that's the case, you know, reduce your capital exposure, only get a 7x as opposed to a potential 10x. And who's to say that's actually going to happen, right? So to me, if you can guarantee a couple quarters of lost opportunity cost, but guarantee a 7x as opposed to a 10x, and you're kind of just floundering over some time, then yeah, we'll kind of see. But I think it's going to be very telling once we get to 1Q, what the profitability trend kind of looks like going forward. Because if 1Q looks good and you're able to generate, let's just say, closer to $100 million in EBITDA next year or something like that, then shit, like this thing is probably only going to continue to grow. And if you're trading at $100 million in EBITDA, you're getting close to a price to EBITDA of close to 20, because it's a $2 billion company, $100 million in EBITDA. So, you know, that's where my head is at. It's like, it's the same thing with Dutch Bros right now. Like Dutch Bros is on the pace next year to make close to $200 billion in EBITDA, $200 million in EBITDA, sorry. And it's only trading at a $4 billion market cap. And you're sitting there like, it's not too expensive when you think about it in that respect. So same thing with Celsius that I want to talk about tomorrow. Like you start looking at Celsius, you're like, it has some potential to triple or quadruple revenues here in the next couple of years. And it's like, their profitability is already pretty good, and their international opportunity is even better. So anyway, I've been chatting for probably a good 30 minutes or so. Any thoughts before we sign off or talk about tomorrow? No. Is there anything in the chat that I missed?
No, I think you covered a lot of Rocket Lab, which is good. I have to do more research. I have to do more research because it does seem like a very compelling business to look at for the future, for the long term. So yeah, I'll take a look.
And I think that I will be adding shares when I find an opportunity. I have Pepsi still. Fuck. I have so much Pepsi where I'm like, do I actually need Pepsi in my portfolio? Or do I sell half of it, buy Rocket Lab, and take the other half and just buy more S&P 500? Like, I don't know. Anyway.